This used to be your old model. Hmm. Uh-huh. Mm-hmm. Yeah. Why? That one? I did. Yeah, I'm in it. I took it on my live though. $300. 180. Yeah, if I close right now. I didn't close yet. Okay. I closed it. Half. All of it. Yeah. I moved my stops to break even, so it's risk free. Yeah. Well, because of your call, what the heck? my live account as serious as I should. Yeah, I've been only doing that. Ooh. Are you live? Mm. Wait, what Discord? The Ottawa one?
No, 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 no. My stream couldn't hear me. Oh my. What the heck? Okay, hold on. Let me just update the stream. I'm mute for a sec. Alright, so I just want to explain, kind of go over everything, what I was doing here. First of all, no, I didn't have this because you couldn't hear me, but I was saying at around 9:39, I don't think we should dig into this range because we swept here. And this would be like my breakpoint model. I think we shouldn't return back into this range. So when I went long, I put my stop beneath 75%. This used to be one of my old models, basically. Um, that 75 or 25%, that level there, I would put my stop beneath that level and aim for about 3 RR. Nolani took this trade, so she just took half off. I told her to take half off, and now she's still. Hold on. Honestly, she just closed everything right now. It's that one projection of the dealing range. So, like that would be my model. If you're taking my signal, I'd close everything right here.
I just closed.
Best. How much you made then
Uh,
off my signal?
Total?
Yeah, how much you made off my signal?
383.
383, almost $400. Down. Good shit.
Thanks. I mean, I wasn't in drawdown anyways. I was still like up on this account.
Yeah, but you must be up quite a bit on the account, cause
My balance is 1500.
so you're up 500.
Yeah.
Damn, that's nice. That's nice. So you're up 50% on the account.
Mhm.
Yeah, I was explaining to the stream because you couldn't hear me the reasoning behind the trade. Um, do you remember what I said?
Um,
You want to explain it?
I remember that we said it wasn't gonna go back down because
Yeah.
I didn't understand that part.
Okay, so if you go to the 5 minute chart, you see how at 9:25 we sweep the low.
Yeah.
So now usually that would be my model one for 2025 to go long, but when I saw it at 9:35, I just knew that it probably wouldn't. After it closed around 9:36, I just knew it wouldn't retrace. Like I've seen that happen so many times, where I have a model entry and then I have a signal to enter, but then it doesn't pull back to where I want it. And I was saying even if it did pull back, my stop would be too big. I'd have to demand something at the low end of the gap, which just doesn't make sense. I didn't find it realistic for it to pull back all the way there because I said how this range from 927 to 931 swept a significant area of, it swept the 5 minute low, and then price quickly closed above it. So the way I see it is the fair value gaps that went down were paired with fair value gaps that went up. So bearish fair value gaps paired with bullish fair value gaps, and that left a balanced and equal price range. It's no longer inefficient. It's not efficiently delivered. And so if we're in a buy program, the down close candles, as you see with this down close candle at 939, same thing with the down close candle at 947. In a buy program, and the down close candle at 942 to 944, all these supported price. You don't want to see price unless it's pulling back. Disrespect these down close candle. But remember, I didn't want to see a pullback because we closed above this higher time frame down close candles. So we should be using this as an order block. You see how the 931 candle, if you look at that candle and you look at the next candle, how we opened up, closed above it, formed an order block, and at 933 pulled back into the high of the 931 candle. We wicked into the opening of the 931 down close candle. It's the exact same concept. It's just now we're looking at it on a higher time frame. So if you were to go to maybe like a 15-minute chart, you see that down close candle at 915. You're basically trading a pullback into it. That's basically what I did before it formed. So it's the same concept as forming an order block and taking an order block entry. It's just you're doing it on a bigger time frame. And so that's why I wasn't really expecting it to pull back, because this price range had been balanced so quickly. I'm like, okay, I'll get in at the high of the dealing range, project the dealing range, one projection, and that's the model. Stop is beneath 75% or 25% of the dealing range. And then I talked about how I wanted to see the order block support price. You also got in and took the model. What?
You think I was gonna take it?
I didn't think you'd take it, no. But hold on, let me, I was surprised when you took it. Dang, I need to find, I have this image for my model somewhere. No. Oh yeah, there you go, I got it. Repair? What the heck? What do you mean I can't open this? Okay, I got it. This is the model I gave you a call for today.
Dang, it hit full TP.
Yeah. So this I call, when it's a long, I call it break point. But basically the idea is you have a breaker from low to high, a Judas swing, which usually happens at 9:30, so within a certain time. And then you deviate that dealing range from low to high, the sweep, you project it one time from low to high, and then you try and line it up with some sort of liquidity or some fair value gap, and then you get in with the first fair value gap you see, or the block, or the high of the dealing range, whatever reason you have to get in at the high of the dealing range, and you put your stop 20 points or 75% of the dealing range, and you aim for the next premium after around one deviation, and again it should hit at a certain time. So that's like the whole model, and the same thing when you're selling. Can you see my screen?
Yeah, I'm looking at it.
No, but are you seeing my chart, or are you
Yeah,
seeing presentation?
I'm looking at your chart right now.
Oh no, oh oops, wrong one. Supposed to be looking at this. Sorry. Let me start over what I was saying. So yeah, you have a breaker from low to high, a Judas swing that draws on some discount area within a certain time, and then you have a premium array, and you aim for about one deviation of the breakers that sweep. So the Judas swing from high to low, I call it the dealing range, but you project you project the breaker from low to high, and you go for one deviation, and then you get in at the first order block fair value gap or at the high of the dealing range, put a stop to 25% or the 75% of the dealing range, or 20 points, and then it should very quickly, without any drawdown, deliver to a premium to a higher time frame level within a certain time. Same thing when you're selling. You have high low initial false move, and you have a very clean Judas swing, and when you close at the low of it, you should continue going. This is also why sometimes when I'm in setups and then I short and then I have my TP at the low of the dealing range, whenever it's like such a big, whenever it's so much trouble to the point where my take profit would already be 3RR at the low of the dealing range, so I almost don't like it, because I know it should continue going lower, and it oftentimes only does that when it's inefficient, because it's already out of steam and it can't continue going lower. But anyway, so this would be an example on the dollar monthly chart. Now I don't think this is the actual model, but it's just a pattern. So you have a nice sweep, and then you close above it, and you don't really want to return back into it. You see how I hit 75%? I'm calling it random, but this is more like it. We have a range that sweeps some area of liquidity, which is important. You always have to pair it with a certain area of liquidity. In this case, it's the high of the day, and then once we close beneath that, we pull back into the first fair value gap, and then we dump. Stop is at 75% of the dealing range.
Why is it called a Judas swing?
Because Judas was a goat in the Bible that led all the other sheep to slaughter. Yeah, so Judas it's a story. Same thing here, but on a daily chart, I think. We actually, no, I don't know. This is hourly chart. A nice sweep, and then dealing range. What? Yeah, this is all me. Yeah, you can see my LPTrades in the background, and then you see the first fair value gap. Boom. Delivers a huge range, no drawdown. August 28th, the day before, another range. Yeah, into a specific liquidity level. We sweep a certain liquidity level, 11:50, 12:10 macro time, and then once we close above that in the afternoon, boom, first fair value gap respected, almost no drawdown, delivers straight to the buy side liquidity, projected one deviation is around there. Another example, I don't show it, but from low to high, this probably sweeps some buy side in the past. Once it closes below it at 9:30, it just dumps into sell side liquidity lower, deviate that, breaker one. That one's not a clean though, but this one, another clean one. This is the one I actually took. Delivered almost no drawdown. Same thing over here. These don't look as nice, but yeah. And this is all of the ICT videos that I used to build that model, from most important to lower. Huh? Well, yeah, I can send it to you. Yeah, yeah. But the first few bridge series, dealing range, one setup for life, those first 4 or 5, there's some certain parts in the video, like secrets, I guess, or ICT kind of like in quotation talks about a certain thing that made me go like, whoa. Like there's some things in similar. I think the bridge series at one point he's talking about how like when gaps should stay open, and that was like a big hint. Like what gaps shouldn't be traded to, which one should be open. Dealing range is the same thing. Dealing range is, oh my, such a good video for beginners. You're really gonna like that video actually. If you're trying to think of sweeps and you're looking at sweeps, and then the rest is really just, it was mainly I think the first two, but the rest is all just good stuff that I kind of used to build onto that model. Let me share that with you. Sending it to you now. So yeah, so that's basically what happened here. Deviating the breaker would have given me the high of the fair value gap, but I would have went for 2 deviations here, and then I would have gotten out because 1 deviation wouldn't. What? Oh, well, I'll tell you in a sec. 1 deviation would have not given me enough profit, so I would have went for the next deviation or 50%, 1.5 deviation. So around, whether it's 4R or 5.44R, the deviations of the breaker are support and resistance levels. So I'd have, I'd the 5.45R no drawdown is really good. The reason I stopped trading this model is just it's highly complicated. It's for me, like if you look at the PowerPoint, sometimes it's not clear and sometimes it looks like it swept, but it didn't really sweep, and then it's easier this way to get really emotional about it and make bad trades. And I was making too many bad trades because at the time, look how detailed my presentation is and how detailed my charts are. Have you ever seen me stream and my charts are this detailed? I have an order block. I don't, look at all the, just for a trend line, look at all the different things that I have, CSD buy side. Like I used to detail my chart so much because I was trying to be perfect. And this model was just me trying to be perfect. It was me trying to be involved in every move. If it didn't pull back and give me an entry, I wanted to be involved. And I I think this model is a great model, but it's just not for me. Like it just doesn't, it maybe if I had more patience and I had, yeah, I don't know. Like it's just not, it also doesn't happen often enough for me to be like just comfortable with it. I was just always trying to be perfect, and yeah, I don't know. What? Um, yeah. You didn't know about this model yet, right?
No.
I haven't talked about that model in a very long time. I feel old. Yeah.
You're withholding information.
With you haven't seen anything yet. But one day I want to trade this model. It's just super complicated. Like it's way harder to teach this model to somebody. And I don't know if I can't I don't know if I can put it in a way where it's A plus B. Well, I could. I did. I could trade this model, to be honest. It just would happen a lot less. But here specifically, what's important is context, like buy side and sell side levels. So there was sell side liquidity here, the low at on Wednesday, August 20th, and then the relative equal low also the 5th of August. So that's like on the higher time frame, like hourly chart. That's like a very significant and spaced out low. Then once we did that, as we swept another level, we create a dealing range. We sweep that dealing range into sell side liquidity at a specific time, which is a 9:30 macro opening, creating the Judas swing. These are all like ingredients to the model. See, the model isn't just as simple as finding a sweep and then longing when we close above that sweep. You also have to pair it with sell side liquidity, buy side liquidity. So it takes a lot of your attention and time. And again, if I'm working a job, like I'm working at Domino's and I gotta be available in the morning, it's like I can't wait if something one of the entries happened in the afternoon. Like it took all day for it to close above the dealing range. So I can't sit there all the time and take these types of trades. But yeah, this would have been the sell side liquidity level, and then the fair value gap. I had marked this at one point, but this is the 50-minute fair value gap. We hit halfway of that, and then this is also an order block. So there's just a lot of reason to sell here because it's in a premium and you have a bunch of PD arrays lining up. This consolidation is just kind of tapping into that consolidation, filling orders, and now it's probably going to go back down or consolidate here. But it lined up with about 2 deviations. So that would have been a better area to take profit at, but for you, you were already up more than what you lost, and it was already 4R, and I just said close it. Because,
That's
like,
where I had my take profit level at.
yeah, you should just kept it there. You would have made an
If I
extra.
did, I would have made 600.
Damn. Don't listen to me then. What the hell?
But it wasn't my model. I was just taking whatever you said.
Yeah.
So,
Anyways, but yeah, I just kind of told you because usually I would aim for one projection. It just wasn't enough profits. So after the high of the gap, I just said, it'll probably continue going up, but just take profit now. Like you've already made enough. You're up for the day. Like you should be happy that you made anything. Because I didn't have to call this for you.
but did you call it for me? You didn't think I would
I
take
didn't
it?
expect you. I didn't expect you to take it. No, but I'm glad you did because it's encouraging.
I accepted the risk already. Is what I meant.
Mm. Yeah.
So much to take it. I will.
Justin texted me. He's telling me he needs help. He sold his Arrowhead position. He had this stock, Arrowhead
What
Pharmaceuticals.
happened?
Well, he had a stock Arrowhead Pharmaceuticals, and they had a huge like 8% move. He's back at his book value.
I had that filmed the whole time. I didn't know I was filming this whole time.
Do you have the audio?
No, not the audio. I just have it screen recorded.
Fuck. I wish you had the audio, because my stream didn't have my audio at the beginning, and you can't hear how convicted I was in this position, in this trade. It would have been a good flex. Alright, I'm gonna end my stream, because I don't think there's really much else to look at for the day.